Morning, everybody. It's the 9th of October. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Ian Coleman. Good morning, Ian.
Good morning, mate. You right?
Yeah, all
All
good, thank
all
you.
prepped up.
Yep,
Got your Sporticus gear on.
yeah, off for a weekend in the Isle of Wight, cycling round with a couple of mates, so that should be quite good fun, providing the weather's all right.
How many pit stops?
Oh, there'll be a few, I'd have thought.
Yeah,
Not
bit
racing, so just going to take
bit
our time.
bit wobbly in the afternoon.
It could get that way, yeah.
Where are you staying? Have you got caravans or you got?
My friend's got a super duper motorhome that we're staying in, so that should be good
Oh,
fun.
nice.
Yeah. So yeah, looking forward to it. How about you? You're off to
Oh, good.
Southend this weekend, aren't you? Coming
Sunny
down here?
Southend. Yes. Yeah. It's coming down to see the family.
Cool.
Taking the dog, leaving the kids.
Oh, sounds perfect.
Mm, hopefully, as long as the
Yeah.
house is here when I get back.
Cool. Um, okay, so it's Friday. We made it. It's last day of the week. It's been a fairly turbulent week, I think. Not a lot
Mm,
really happening, but a lot of chop in the markets,
a
and
hell of a lot of
that's made
chop.
for difficult trading conditions.
Yeah, I agree.
Um, a few bits of changing tact from the US. Initially, there was chat that Trump wanted to hold all conversations about stimulus until he'd won the election. He was that confident. He's now bringing it back to the table and wants to talk about it again, leaning towards another large scale stimulus bill after the House Speaker, Nancy Pelosi, pushed back on the idea of individual measures for parts of the economy hit by the COVID crisis. We said yesterday that they were talking about targeting the airlines in some sort of bailout. But the president is now back at the table and talking about stimulus again. And it was a little bit of a boost for markets, not really a lot in terms of sort of bullish momentum, but
Mm.
overall it still looks okay, really. I mean, let's just have a quick look at some of the indices to see the reaction to what's going on. This is the daily chart on the FTSE, first of all. Been talking about this wedge, what feels like forever now. Continue to trade within that range. We have seen a little bit of a poke above the resistance level here. If we look at the hourly chart, we talked about this range earlier in the week, which it's now broken out of. We've seen a push up, pull back to the to retest it, and then a push higher. Stalling a little bit this morning,
Mm.
but overall, I think I probably expected to stay within this wedge for the foreseeable. So we may see upside to somewhere around there, 6,120, something like that.
Going to have to be one hell of a fundamental news release, though, wouldn't it, to break it out of that wedge to the upside?
Yeah, quite possibly. And is there the belief in the underlying economy that things are all going to go back to
Mm.
normal? Obviously there's huge amounts of cases picking up again. In France, we've seen the total reach yesterday 18,129, putting more cities on maximum alert. And the restrictions are now beyond Paris and Marseille. The country's 7-day rolling average infection rate is at 13,448, which is the highest since the beginning of the outbreak.
Wow.
So we're not
Mm.
getting on top of it
No.
by any means. I think hospitalizations are going to be key to seeing what happens with those and whether or not it's going to be as bad as it was last time round. This is the German market. We did have this wedge which broke down, and we're now seeing a retest of this level around about 13,055. I was quite keen on being a seller up around about that level and looked at that on the gun to the head trade yesterday, but got stopped out on a poke above, which isn't a problem. I think we could
It's
see it squeeze
basically
a little
opposite
bit
to what
higher.
the FTSE is. It's
Yeah,
FTSE is descending. That's a breakout already, isn't it? So,
well,
a bit
yeah,
bearish and
unless
bullish, but
you put it down there. But I mean, the
mm,
difference between the two is that the FTSE has quite a lot of stocks that derive or generate a high amount of revenue in US dollars. So it can be a bit of a dollar play as well with the FTSE. So it's something to bear in mind as well. To be honest, it's not the greatest market to trade based on that. It can throw up a lot of mixed signals.
yeah.
Um, on the indices front in the US, it's all still pretty hunky-dory, to be totally honest. That's the daily chart. Nice big rally higher, bit of a consolidation, breakout of the wedge, and a continuation higher expected. Choppy, big ranges over the last few days or so. If we just zoom into those candles there, we've got some fairly large ranges taking shape here, but no real progression in price. Which further highlights what we said at the outset, that it's been a pretty choppy week. One thing I have noticed that's looking quite interesting is gold. I mean, this has obviously had a fantastic rally in line with other risk assets since the beginning, sorry, since mid-March. We've seen quite a long consolidation in gold, but it is potentially approaching the upper end of this wedge, which if it does break out above 1921, then we could see a fairly decent continuation higher over the medium term with gold. So that's something that I've got on my radar today, and keeping an eye on that 1921 level to see if there is indeed going to be a breakout. I guess Ian will come on to how the dollar looks, and also we can marry up the two and see how that looks and whether or not that supports the idea of a gold breakout.
I'm just looking
Oil.
at it. It does look like a bit of a mirror, but
Okay. Just one more
we'll talk about it in a minute.
chart is on oil. It's had a really good rally this week. This is the daily chart. This is the gap that really started that panic move down to negative prices on the futures contracts back in March. And we've seen the price rally back up to fill that gap. We saw a little bit of trading above it, but not for very long. Before then, we started pushing lower, but we're back at that level again today, pretty much bang on it at 41.65. I don't know whether or not it's still relevant because obviously it has been filled, but I imagine there is a fair amount of resistance between these levels here. Now, there is a hurricane doing the rounds in America, so. Oil had its biggest weekly gain since June, with Hurricane Delta forcing operators to shut in almost 92% of crude outputs in the Gulf of Mexico as the storm heads towards the US coast. It's already slammed into parts of Louisiana, I believe, after barreling across the Yucatan Peninsula earlier in the week. So keep an eye on oil because if that hurricane does indeed intensify, then we could see prices move higher in oil over the coming days.
That's not what I wanted to hear. That
no. Well, there's no hurricane in Southend, so you'll be all right.
No, I've taken a small dollar CAD position this morning.
Okay.
Which I was going to talk about.
Well, still talk about it.
I was still going to talk about it. Yeah.
All right, cool. Right, well, that's pretty much rounds it up from me. I'll chuck it over to you now, mate.
Dollar index. So basically, Joe was saying that we've had this sort of period of consolidation. If we put this to a daily chart, just zoom in. Sort of, 1, 2, 3, 4, 5. So basically, we've had a week's worth of no movement. I mean, these are virtually inside days, and it really just reflects what we're seeing in stock indices. If I break it down into 4-hour chart, though, which is my preferred time frame, rallies are being sold into still. This is prime support. So like I was saying, I have been saying all week, we're really in no man's land. And I prefer to see a further move to the downside before basing a lot of currency trades on just purely the dollar index. But one that I did want to talk about today, which Joe's highlighted or pushed me into with oil, is dollar CAD. So we look at these basket charts quite a lot, and this basket chart is just if this is going to form. What we've been talking about cipher patterns a lot this week, and if this is going to form into a cipher pattern, then this BC leg should turn around soon. And you can see here with a stop above here, you've got one hell of a potential R of playing Canadian short trades. So Joe's just said that they're expecting that hurricane to bang into a few oil fields. I mean, a stop above and targeting down here is about 12.5 R just to play the Canadian dollar side. But obviously, if oil prices go up, the Canadian dollar goes up. But we have got employment figures today out of Canada. They're expecting a build of about 150 odd, and if that is worse than expected, then we should see a weakening in Canadian dollar and a potential move to the upside. So I'm going to have a look at CAD. And the reason why I like it as well is not just because of that move up, which is stalling around that 88.6% fib, but we've got this 61.8% fib here. And if you line them up, which is what I'd basically try to do, so I look for a relevant retracement level, and then I look for a relevant extension level that lines up, if you like. So basically we've got a confluence area here at 131.58, which could potentially see a move all the way back up to this level around about 133.90. Now I've not really looked at oil with regards to sort of cipher patterns. I'm just wondering whether or not you've got anything in the reverse, but I doubt it. It's not something that I should really try and fudge today, but if we go to fib retracement level there, I mean, we could say that we're in a bit of a corrective channel, maybe. Oh, I'll have to move that down. So maybe just one last spike to the upside before we see a correction lower, but who knows. So getting back to the others, so basically dollar index, I'm looking at buying dips or selling rallies, and it's in no man's land at the moment. We explained CAD. Euro, I'm still bullish on this. I still see a move to the upside. That's not just on euro strength, but it's also on that dollar weakness down towards that support level. It's very, very mixed and volatile, but dips, as you can see, continue to find buyers, and we're still posting higher highs and higher lows. Cable is a little bit different, and that's why I've still got a bias on euro sterling, for euro sterling to move to the upside. Without a break of this level here, then you could see a move in either direction. The prime long entry, I believe, is still down here. So, but again, it's a bit like the dollar index. We're in no man's land. I'd prefer to buy dips here or sell rallies here. Dollar Swiss, we talked about this, I think it was yesterday. Again, just moving hopefully lower towards this prime support at 91.12, and again that would be playing on both sides. That would actually be playing on the dollar resuming strength in the dollar index, hopefully, and weakness in Swiss, which we've got on the basket. So it's just a case of being a little bit patient, I think, on these. Dollar yen, I've got this cipher pattern, but again, does it make me horny? Not really, because mainly because all the other yen pairs aren't really showing the same yen weakness. So I would be wary of basically all of these fib levels on the way to the upside of potential stalling. And instead of focusing on the dollar yen chart as a single unit, what I'd prefer to do is actually just to look at the yen and yen crosses to see whether or not we're going to marry up with any of these resistance levels. Dollar CAD I've already talked about, looking for a move to the upside. Aussie dollar, we only got a small stall. Again, most of the Aussie crosses are looking pretty firm really at the moment. I think we're probably going to move up to here. Euro sterling, we had a nice bounce off some trendline support yesterday. Or it was close to trendline support. We're in sort of no man's land again this morning, but if we can note, we're just getting a bit of an outside bar. Sterling Swiss looked a lot better. That actually was a perfect bounce off the trend of lower highs. So what I think we're getting here is a descending triangle formation, which is going to take us down to this sort of level. Euro yen, again, we talked about this yesterday. This looks quite prime as a resistance level, but without the baskets lining up, I think you could potentially see a breakout up to here, which is 128.04. So it's just a case of seeing if we can get any confluence on these resistance zones. Euro Swiss, quite like this for a move to the upside. Actually, I'm quite surprised that we've seen a dip lower. It might take that as a trade of the day. We got a really decent bounce off the symmetrical level at 107.39. I can't really, looking at the crosses, looking at the single currency baskets, I can't see any reason for it to move too much lower aggressively anyway.
Okay.
That's it really. There was a cross that I was quite interested in yesterday. I can't remember what it was now. You keep waffling, Joe, and I'll see if I can find it. So Aussie CAD. It was one of the Canadian crosses. That was quite a nice one, but it wasn't that one anyway. No, don't worry about it.
Okay. Cool. Well, let's have a look at the gun to the head stuff from yesterday. So 2 trades, one from each of us. I went short of the DAX and got stopped out for a 1 hour loss. And Ian, you went long of Euro Sterling and just had a 6-tick win at the close there. Just again, it's really not going anywhere, some of these markets. So you'd like to think by getting in at the time we do, around about 9 o'clock in the morning, and giving it 12 hours to run, that you get something out of it. But just not enough happening, is there, really, at the minute? So what have we got today?
New Zealand CAD. No, that was I'm just being prompted. That was the one that we're looking at yesterday. For some CAD weakness. So basically very messy, but the fibs lined up pretty well, and we're just seeing a move to the upside, but it might just form a bit of a head and shoulders on the inside. So stalling again there, and then I think depending on what happens with the Canadian dollar at lunchtime, sort of buying a dip at 96, 86, 30, 38. But for the trade of the day, I'm just going to go with this bad boy because it's got very close to that support level, which is dollar CAD. Getting long. I'll go up to 78.6. So getting long at 131.66, targeting 133.64 with a stop at 131.38.
Happy days.
7R to finish the our year, isn't it?
Yes.
A year today.
Yep. Okay, I'm going to take a look at. Well, I can't make mine up. I'll have a look at gold. On the basis that I think it could potentially break out from here. This is on the daily chart, so above 1921 is when it really starts to pick up a bit of steam. So obviously buying now with a gun to my head, I'm expecting it to break out, and it is a preemptive move. So if that's the case, I'm buying at 1914, but I also quite like the look of Bitcoin.
Stay away.
Yeah. Just looking at the daily chart here, it's had a decent bit of upward momentum this week, or last couple of weeks. Strong move higher over the last few hours, a bit of consolidation, and expecting a bit of a breakout above these resistance levels here at 10,950.
You've got a double whammy there, haven't you? You've got an ascending triangle and a flag.
And a flag,
potentially.
Yeah. So what's got the best art? That's got 4.78, and gold has got 3. So Bitcoin
it is.
Bitcoin it is. We're buying Bitcoin at 10,891, targeting a move to 11,180 with a stop loss at 10,820, let's say. Just round that down. Yeah, so that's 2 trades for you today.
Good luck.
Lovely. Land both of those, then we'll be looking good.
Back in the driving seat.
Absolutely. As you mentioned, Ian, the only high impact bit of data that we've got today is this Canadian employment report at 1:30. The unemployment rate is expected to fall to 10.1% with 250,000 jobs created. So CAD is going to be certainly in focus around about that time, and hopefully that'll give you a nice kick on your trade of the day.
How can all these different websites get such different figures? FX Street have got 156 as a build.
Right.
So a bit fluffy, isn't it?
Yeah. Well, I guess if they have such a massive range, then it's harder to miss.
They're all right, yeah.
Yeah.
Okay.
All right, I think that's about it.
Yeah, enjoy your cycling.
Yeah, you're off next week, aren't you?
Yes, but I keep on moving it around.
Okay.
So I was going to be off from Monday, but I think I'll be off from Wednesday instead.
Okay. Well, we may see you next week then.
Yes, hungover.
Yeah, normal.
Thank you.
Have a lovely weekend, mate.
Yeah, Andrew.
I'll see you soon.
Cheers.
Bye.
Bye, mate.